Good afternoon and welcome to MF Corner. I'm Sumera Abdi. On the show today, Hemant Rustagi, CEO of Wiseinvest Advisors, and Anubhav Srivastava, the partner and senior fund manager at Infinity Alternatives, join in to recap and to assess the impact of the newly introduced RiskoMeter. But before I toss it to my experts, let me just briefly lay out some of the highlights for you. So SEBI had introduced the new RiskoMeter to investors, and what this essentially does is that there is a new category of very high risk which has now been introduced. Among other things, risk will be computed scheme-wise and not category-wise. So, for example, if you were to buy, say, a credit risk fund, so the category itself could be in very high risk, but within that category, this risk of each scheme would be different in terms of the number scale that they have. So it's easier for you to understand. All schemes, even credit schemes will have the duration criteria. Duration schemes will have the credit criteria in debt funds, and all schemes will have the newly introduced liquidity criteria. Now, what are all of these criteria? We'll get to that in just a bit. But besides other things, of course, the new category is very high risk. All equity funds will now be in the high and the very high risk category, and the credit risk fund would also go into the very high risk category. The other funds would be depending on where they score on the number scale between 1 onwards. They would fall into any of these other categories. And it's not just that, once they've fallen into a category, it becomes static. For once, the RiskoMeter is going to be very, very dynamic. So risk is actually going to be, computed on a monthly basis. So every month, as the fact sheet is, released by the scheme, they will tell you that, we've sold XYZ bonds, we have bought ABC bonds, and that's how, our risk has changed because of this transactions that have taken place, depending on who they have given that money to. It will also be disclosed with the portfolio disclosures every month. So every month an investor can track whether or not the risk profile of their scheme has changed. On the 31st March of every year, they'll have to disclose the risk levels of each schemes. And also there will be an evolution scale of, say, over a year, where the scheme will have to mention that, over the last year, this is how the risk profile of my scheme has changed. So you'll know that whether a fund manager is increasingly becoming, taking on more risk, or they are becoming increasingly, more conservative in their investing style. So all of that will now be very, very objective in terms of the assessment there. And not just that, the change in risk is a change in fundamental attributes. So, basically, when experts tell you that, these are the 5-6 things to monitor in terms of the changes in your schemes, how to know whether or not you should remain invested in that scheme. So those are some of the attributes that investors need to monitor. This change in the risk profile will also become a fundamental attribute, and therefore will also decide whether or not you should remain invested in this scheme or not. And of course, why are we discussing it today? Because, later this week on the 1st of Jan is when these rules will be effective. So now to my experts, Hemant and Anubhav, thanks very much for joining in. Hemant, first, let me toss it to you. Because now pretty much every scheme will have a change in their risk profile, right? So if I, as an investor, was holding on to some schemes in my portfolio, will it mean that I need to, or rather, is it advisable that I rejig my portfolio now to realign it to my risk profile?
Well, Sumera, first, let me just begin by saying that as you explained as to what is going to be there in the new RiskoMeter, so I believe that the RiskoMeter in the new form captures much more information on risk evaluation. So I think it'll bring in more transparency, it'll bring in better understanding for the investors to understand what kind of risk are they taking. As you rightly mentioned, currently is happening at the category level and it's static. Basically, once you know that, okay, you're getting into a particular category. Now, for example, currently, if it's a well-diversified fund or an index fund, it falls into the risk level of moderately high. And if it's a sector fund or a thematic fund, it's in high. Now, there's another category of very high. So if you look at all these parameters, which have been now explained, the way, the risk will be assessed for equity fund and for the debt funds. So clearly there'll be a lot more transparency. There'll be a lot more information. Investors will be able to see it on a monthly basis as to what is the where it is on the RiskoMeter. So I believe that this transparency will help investors in understanding what is the risk that they are taking for each of the scheme. But it won't necessarily mean that for every scheme or entire portfolio will have to be changed. For example, if you're already in an equity fund, you know that you are into something which is risky. But today, of course, what will happen is, as you rightly mentioned, all the equity fund will go into very high risk level. So to that extent, it will change. But I think apart from looking at what is there on the RiskoMeter, one has to really also look at what is your time horizon, what kind of risk you can take. And if you look at only risk, obviously you're going to find it very difficult to invest in equity fund. For example, you need to understand what is the potential of equity in the long run, that yes, it has the potential to get you positive real rate of return. So you need to look at risk as well as the potential. So I don't think investors should start doing something right away and thinking that I have to change my portfolio. I don't really think so. They need to first understand, analyze their portfolio, look at each of the scheme, look at the risk level and whether they're comfortable with that. Of course, if they're not comfortable in terms of maybe the time horizon is not that much what is required for an equity fund or aggressive fund, that changes will happen, but I don't think they need to necessarily start working on the first week of January itself.
Okay, we'll move away from mutual funds in just a bit and come back to our experts. There's some news coming through. The Punjab government, we understand, has written to the state DGP to ensure protection of telecom towers in the state. Ashmit Kumar, our correspondent, joins in to fill us in on this story. Ashmit.
Well, there is acute distress as far as rural Punjab is concerned. The reason being that a lot of geo towers are being targeted by protesters, by agitators, by local farmers. The issue has, of course, been that they're looking to target in light of the protests that are currently underway on Delhi borders. Now, in terms of operationally, what does that mean? Well, around 1,500 towers were affected, of which about 400 have been operationalized, but there are concerns that continue to remain as the reports continue to come in of forcible shutdowns, of damages to equipment, and harassment of staff. Now, towards that end, what we understand is that the Tower Association had written to the Punjab government highlighting these concerns, that the staff is being harassed, equipment is being damaged, there are forcible shutdowns predominantly in rural areas, and that this is causing grave concern for the industry. And towards that end, we understand that there has been some response coming from the Punjab government. Punjab government, number one, wrote a letter to the DGP clarifying that these tower assets need to be protected against these elements that are causing pressure, that are causing for towers to be shut down, that are causing connectivity issues. This is one letter. Following that letter, just yesterday, we also had a statement coming from the Chief Minister himself, Captain Amrinder Singh, who said that the police have been clarified that they will have to take action against elements that are causing these instances of vandalism. So it's a case of the state government waking up to this issue, choosing to respond, and that is hopefully looking forward in terms of addressing the issue. Sources, of course, tell us that Geo is constantly in touch with the local police authorities as well as the local DGP and is hopeful of this issue being resolved soon enough.
All right, Ashmit, thanks very much for filling us in on that. Let's move back to the issue at hand then, which was mutual funds. And we've been discussing the RiskoMeter. Now, we've been talking about whether or not it mandates a rejig of an investor's portfolio. Anubhav, same question to you. Is it serious enough for somebody to have to go back to the drawing board and sort of, relook at how the schemes sort of fit in?
So I think this is something you both touched upon, just a minute ago. The problem with rejigging your portfolio is not the risk per se. Sure. So at the first instance, you will know what your fund is doing. But I think the critical number out here will be that March 31st declaration as to how many times risk has changed. In a portfolio, especially in asset allocation, if your fund manager is all over the place when it comes to risk, then that's a fund that you need to get out of. But if there is consistent risk or there's reasonably consistent risk, then that may not be such a bad thing to stick onto a fund depending on what your advisor has told you, what your overall portfolio risk is going to be, and so on. So I don't think they'll need to necessarily readjust. There will be minor changes. Especially with this three-tier structure that they've put in to provide the RiskoMeter and the numbers for equity, debt, gold, and international. Right. Again, coming back to international, I think they've given it a standard risk of 7, which is pretty high. I'm assuming that's coming from a fact that not too many people will know anything about. international investments. So by that definition, it should be considered high. Gold is considered low at 4 because apparently everybody understands what gold is and what gold does. So if you're purely looking at numbers, then that may not necessarily be something you want to do to rejig your portfolio. But come March 31st, which by the way is around the corner, you'd like to know how many times the risk on your portfolio has changed. And if it has changed too much, then maybe you're not in the right fund.
Okay, so that's a good thing, is to also see the evolution of risk. Hemant, on the debt side now, we had the duration funds, and the most recent example, of course, is Franklin, where we saw duration funds had credit risk. So is that going to now change, say, returns from investors? I mean, can you explain this credit, duration, and the liquidity parameters, which are now all intermingled in the debt funds?
Well, Smara, surely, like I mentioned earlier, I think there are parameters which have been defined to risk label the equity as well as the debt funds. Now, if you look at debt funds, basically there are 3 major parameters which are going to be considered here. One is what is the credit risk there. So in terms of credit risk, each of the credit rating has been assigned a credit score. Now, for example, cash or near cash or sovereign or AAA has been given a credit score of 1. And then AA plus is 2, then it goes to unrated, which is 11, and then below investment grade is 12. So this is how the credit score has been given. So you will clearly know, looking at the score, as to what kind of credit score which is there. Then comes the duration, which is basically tells you about the impact of the interest rate volatility, which is based on the Macaulay duration. There, if let's say the MD is less than or equal to, let's say, half a year, then the risk level is 1, then it goes up to more than 4, where it goes to 6. So third is the liquidity, where obviously apart from the credit quality, you're also looking at the nature of the instrument, then you're looking at who the issuer is. So there are different parameters which have been defined for all these 3 factors. So I strongly believe that if one were to look at this on a monthly basis or on a regular basis, you will really know, what kind of portfolio your scheme is maintaining, whether it still fits into your scheme of things, or whether the fund manager is taking much more risk than he ought to be. And in any case, the fund manager will be wary of doing that, because as you rightly mentioned, on 31st March, they will have to put it on their website and inform the clients that how many times there was a variation in the RiskoMeter. So clearly, I believe that there'll be much more disciplined process that will be followed by the fund managers from now on, especially the debt funds.
Okay, so discipline by AMCs or fund managers is what I want to take forward. Anubhav, you think it's possible to game the system? I mean, how will this be monitored? I understand that the framework itself will be designed by AMFI, but will SEBI have oversight? Could somebody sort of manage duration and credit in such a way to keep their risk level low?
I think that will be an evolving space. So the short answer to your question is yes. But the risk for the manager or the asset management company trying to game the system could backfire very badly, because the moment some of this data comes out, it will basically expose some loopholes in the RiskoMeter system, which will be plugged very quickly. But neither the regulator nor, I'm guessing, not even the mutual fund body will look kindly at anybody trying to game the system. Because the idea out here is that the investors take informed decisions. Not just investors. I don't think even our advisor community or the distributors have too much of an understanding of what risk is. And this detailed a regulation coming in will basically help everybody do that. Gaming the system is actually counterproductive, I would say. And if you're trying to start to sell high-risk products as low-risk products, or you have some other mishmash going on, that's going to end badly for the AMC in the long term. Can they do it? Sure, they can.
Okay, but will they do it? Probably not. A quick break. Hemant and Anubhav, stay on with us. We'll be right back and tell you a little bit more about the MF RiskoMeter. Stay tuned. Hi, welcome back to MF Corner. We're talking about the new RiskoMeter, which will be effective from the 1st of Jan. And with me, I have Hemant Rustagi of Wiseinvest Advisors and Anubhav Srivastava of Infinity Alternatives. So we've spoken a little bit about what it means for you as an investor, right? In terms of, helping you track how your fund is evolving, whether you should stay with that fund or not. Now let's talk about what does it mean for you if you're, about to get into a fund. So Anubhav, will it help in scheme selection? I mean, all I'll know now is that, such and such scheme is riskier than the other, or this one is more conservative, safer, or will it be too much information overload? Because, I have to now monitor yet another, a variable. So for an investor looking to get into a scheme, what does this mean?
Well, I think this would be good for anybody trying to select scheme, and not only select schemes themselves, but those ones that are getting advised by distributors or advisors or any other intermediary that is out there. Because now you can't really go and sell a high risk product to an investor that's looking for a low risk product, or vice versa, because now you have this whole rating system in place that is declared upfront. So unless somebody is actually, indulging in pretty bad mis-selling or those kind of market practices, this will be very, very difficult for somebody to actually go around and, the kind of stuff that happened with balanced funds a couple of years ago, where they were all sold as FD replacements and all of that. So those kind of things are just not possible anymore. So this will help people actually filter out a lot of the misinformation that comes their way. Will it help them select? Sure, this is an indication which pretty much serves the same purpose as the earlier RiskoMeter did, that whether you're looking at something that is high risk, something that is low risk. I again come back to that March 31st declaration. Somewhere down the line, when all of this is available to you, which says that, the investors, the fund manager's risk is either consistent or not consistent. I think that will be the real killer feature of something like this, which says that I'm buying a high risk fund today. I do not want it to go to a low risk fund and still pay that high fee. And vice versa, I do not want to, buy a low risk fund and that somewhere down the line, the fund manager decides to take high risk, in which case my own entire asset allocation goes for a toss. So for people to select just on the basis of the RiskoMeter, it serves the same purpose as earlier, probably a little bit better. But going forward, I think the declarations that come in on an annual basis will be more useful.
True. So March 31st, guys, mark it in your calendars. Anubhav is insistent. Hemant, you agree that this will curb mis-selling?
Well, I mean, I can say that to an extent, definitely. But like I said, I still believe that it will help investors in understanding the risk better, whether they are doing something on their own or they're being advised by somebody. It'll be easier for them to understand that whatever they are being told, whether it's correct or not. For example, let's take a simple example. Look at a large cap fund, for example. Okay, it may be still, the large cap has been assigned a risk score of, let's say, 5. But after that, you're also looking at the price volatility. You're also looking at the impact cost. So when you analyze a fund on the different parameters within the same category, you can actually see whether you're being offered the right kind of fund or not. So it's obviously important for you to understand the risk, so that you have an expectation of what to expect in future in terms of risk as well as return. So definitely, yes, it will have definitely curb the mis-selling to an extent, but I believe that it will make investors more aware of what goes into and what are the risks involved in each of their investments.
But Hemant, till last year we went with the MF Sahi Hai, and now we are saying that all equity funds are in the high risk category. I mean, isn't that mixed signals to the investor?
No, mutual fund sahi hai, of course. In the long run, bilkul sahi hai. But the point is you need to understand what are the risks there. See, why as an investor you get disappointed is because if you do not understand the risk before getting into an asset class like equity, okay, you will feel disappointed when you are faced with the volatility of the kind of risk which are there. So once you understand that these are the risks which are there, this is what you are getting into, it makes you a better investor, mature investor. You are able to take those bouts of volatility in your stride and remain invested. You cannot question the fact that equity remains your best bet for wealth creation over a longer period. But I think it's equally important to understand that what exactly can you expect both in terms of risk and reward.
Okay, so MF Sahi Hai But read the offer document carefully, monitor the monthly fact sheets, go through the RiskoMeter, and make sure you're regularly updated on everything that's happening to your scheme. But I appreciate your point. Hemant, Anubhav, thanks very much for joining in and for advising our viewers. Well, so there you have it. That's what you need to look out for. The new RiskoMeter, which SEBI has introduced effective from the 1st of January. So for existing investors, like our experts say, that you may not want to be hasty in taking calls on your portfolio, but see how it evolves in 2021. Thanks very much for watching. The team of Closing Bell joins you next.